Ladies and gentlemen, good day and welcome to the JK Tyre and Industries Limited Q3 FY23 earnings conference call, hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference, please signal an operator by pressing star and then 0 on your touchtone telephone. Please note that this conference is being recorded. I now hand the conference over to Mr. Basudev Banerjee, Vice President at ICICI Securities Limited. Thank you, and over to you, sir.
Thanks, Inba. Thanks to JK Tyre's management for giving us the opportunity to host the Q3 FY23 post-result call. We have with us the senior management of JK Tyre represented by Mr. Anshuman Singhania, Managing Director, Mr. Arun Bajoria, Director and President International Business, Mr. Anuj Kathuria, President India Business, Mr. Sanjeev Agarwal, Chief Financial Officer, and Mr. A.K. Kindra, Financial Advisor. So over to the management of JK Tyre for initial comments. Post that, we'll take the Q&A. Over to you.
Thank you. A very good morning. Am I audible?
Yes, you are, sir.
Yes. A very good morning once again, and a very warm welcome to JK Tyre Q3 FY23 earnings call. And I thank you all for joining us today. I am Anshuman Singhania, the Managing Director. I have with me Mr. Arun K. Bajoria, Director, President, International, Mr. Anuj Kathuria, President, India, and Mr. A.K. Kindra, Financial Advisor, and Mr. Sanjeev Agarwal, CFO of the company. On behalf of the JK Tyre family, I wish you all a very happy and prosperous New Year 2023. We are happy to share that the JK Tyre is celebrating 25 years of its acquisition of Vikrant Tyre plant at Mysore. JK Tyre took over the Vikrant plant in 1997 and turned it around into the state-of-the-art facility backed up by the world-class Dr. Raghupat Singhania Center of Excellence for Research and Development. The capacities and the revenues from this plant have grown multifold since the acquisition, leading into a very successful investment. Recently, JK Tyre hosted the 18th edition of the Indian Car of the Year, ICOTY, and the Indian Motorcycle of the Year, IMOTY Award 2023, the most coveted and prestigious award in the Indian automotive industry, a platform created by JK Tyre. This represents our zeal towards honoring innovation and technology in the Indian automotive industry. Quarter 3 witnessed a strong performance across all key parameters. Significant revenue growth, higher volume, and improved operating margins. We continue to maintain our profitability growth in quarter 3 with a strong performance across segments through our focused actions, both on the products and the market front, which led us to achieve double-digit revenue growth of 17%. Our profit margins improved, supported by softening in the raw material prices and continued focus on the cost control and timely price revisions. Overall volume increased on account of higher OEM offtakes. Replacement demand continued to be buoyant. Export continued to remain resilient and recorded a revenue of rupees 484 crores in the third quarter despite global headwinds. Automotive industry continued to witness buoyant demand in the CV segment during the quarter. The growth in the commercial vehicle sales was majorly led by MHCV. CV growth is expected to trend further up in the near to medium term, supported by large allocations of funds for the infra capex in the recently announced union budget. Passenger vehicle sales were also higher with the change in preference towards UVs and rising thrust on personal mobility. Currently, the order book and volume with major passenger vehicle manufacturers remain healthy. On the overall tire sector outlook, we believe that the domestic automotive sector has significant potential of growth, driven by aggressive stance of the government to improve infrastructure spends, higher fleet utilization, and implementation of scrappage policy. The rising demand of personal vehicles will be driven by higher disposable income of the middle class. Further, increased agriculture output should foster rural demand. These tailwinds, coupled with tapering inflation, shall continue to boost the tire sector demand. On the export front, we expect the momentum to gain strength in the coming quarters considering our widespread performance in the export market, product positioning, and our enhanced capabilities, especially in the PCR tires. The government has laid down a concrete measure around EV vehicle transition and green energy to propel the adoption of green mobility. We believe that the EV segment will further gain momentum with the government's visionary action towards creating awareness and creation of EV infrastructure in the country. To strengthen our product portfolio, we have recently launched low RRC tires in the PCR and the TBR range, and also introduced smart tire range for the EV SUV segment. We have full range of EV tires to cater to various market segments. We are further strengthening our relationship with OEM by jointly developing tires for their specific requirements. Operating margins improved sequentially by about 150 basis points on account of softening of raw material prices and continued focus on the cost reduction. We expect margin to improve in the coming quarters with further softening likely in the raw material prices. We are committed to bring best-in-class product to cater to diverse market segments, operational excellence, and continue to deliver improved performance. I am happy to inform that the International Finance Corporation, a member of the World Bank Group, the largest global development institution, has approved the proposal to invest in the company rupees 240 crores in the compulsory convertible debentures CCD on preferential issue basis, carrying a coupon of 6% per annum, which will be converted into equity shares on the face value of rupees 2 per share at the conversion price of rupees 180.5 per share. The Board of Directors, in its meeting held on the February 3rd, 2023, approved the above investments by IFC. Now I would request Mr. Arun Bajoria ji to talk about the performance of JK Tornel, Mexico.
Thank you, MD sir. JK Tornel, Mexico continued to perform well in terms of overall revenue and profitability. During the quarter, JK Tornel achieved a turnover of rupees 608 crores as compared to rupees 521 crores in Q3 of financial year 23, registering a healthy growth of 17%. Operating profits EBITDA stood at rupees 48 crores vis-a-vis rupees 46 crores in the corresponding quarter, a slight improvement. Quarter 3 is generally a muted quarter on account of lower number of working days due to the Christmas holidays in December. During the quarter, exports demand was impacted in North American and Latin American markets due to macroeconomic headwinds. However, we believe that the global demand situation will improve amid easing in inflationary pressures in the coming quarters. JK Tornel continues to remain the largest tire supplier to all the mass merchandisers in Mexico, that is Walmart, Soriana, Chedroi, Electra, Coppel, Casa Le, Suburbic, and Commercial Mexico. Tornel also continues to command highest PCR market share in the PCR replacement market with a share of over 12%, and this is the highest market share in Mexico. We are happy to share that JK Tornel received Best Supplier Award by both Walmart and Soriana, largest mass merchandising stores in Mexico. The award has been given out of 300 plus suppliers in home and essentials category. JK Tornel has also achieved the status of being highest seller of tires on online platform with a market share of 50%. JK Tornel has secured the prestigious 4-star rating for British Council of Sword of Honor Award. Since the acquisition of JK Tornel, there has been a significant growth in business operations and has resulted in yielding multi-fold value creation for its parent company, that is JK Tyre India. Thus, it has been a successful strategic investment for JK Tyre. Now, I would request Mr. Agarwal, company's CFO, to brief about the financial performance of this quarter.
Thank you, sir. Good morning, everyone. Let me brief you about the financial performance in Q3 FY23. The consolidated sales were recorded at rupees 3,623 crore vis-a-vis rupees 3,084 crore in Q3 FY22, registering an increase of 17% on YOY basis. The average capacity utilization was 88%, with radial capacity at even higher utilization level during the quarter. In first 9 months of FY23, sales were recorded at rupees 11,037 crore, an increase of 27% on YOY basis, majorly contributed by higher volumes. Export revenues from India were recorded at rupees 484 crore in Q3 FY23. Profitability at EBITDA level in the quarter was recorded at rupees 349 crore as against rupees 281 crore in the corresponding quarter, an increase of 24%. Operating profit margins were recorded at 9.6%, an increase by about 150 basis points over the previous quarter. Cash profit for the quarter stood at rupees 228 crore and profit before tax stood at rupees 113 crore. The balance sheet of the company is healthy and leverage ratios remain within the acceptable levels. We remain committed to deleverage our balance sheet further through reduction in long-term borrowings going forward. The already announced capacity expansion in PCR and TBR tires projects are under implementation and are progressing well. We have already circulated our earnings presentation, which is also available on our website as well as on the Strong Exchange websites. Now we open the forum for question and answers. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may enter star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who has a question may enter star and 1. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. Congrats on good set of numbers. Quickly wanted to check how does the revenue growth break up between volume growth and pricing growth in third quarter?
Yeah, the volume growth was at 4%, and the price increase was at 14%. So overall, at a consolidated level, overall growth was at 18% for the quarter.
Okay. And India replacement market was stable, it seems. The revenue grew about 7-8%, and that would be largely pricing led, right?
No, the replacement market, our volume growth is to the tune of 8%.
In India?
Yes.
Okay, because I was looking at the mix and it suggested about 8% kind of revenue growth. So, and there we would have seen a healthy pricing growth as well. So, there is some disconnect somewhere. Okay. And second question pertains to the RM cost related benefit which we saw in this quarter. Would it be between 3 to 4 percentage points in terms of RM cost benefit, or it was lower than that?
Well, the RM cost benefit has definitely, the quarter has seen a softening of the RM for the quarter. But the major impact is to be seen by the end of the quarter. The full impact of the reduction will be seen in the coming quarters.
Okay, got it. And lastly, if you can talk about the price hike taken in the third quarter in the replacement market and any price hike taken in fourth quarter so far.
We have definitely taken the price increase. As I mentioned to you, the price increase was in the tune of 11% in the quarter 3, and we have taken the price. I'm sorry, the price increase was in the tune of 1 to 2%, and which we have taken in the quarter 3.
Okay, and any price hikes in Jan so far, or not yet?
No, Jan we are not taking any price increase.
Got it. Thanks. I'll come back in queue.
Thank you. Our next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
So, hi sir, what is the debt number currently? Debt number?
Sorry?
The debt number is on net basis, this is 4,900 crore on a consolidated basis.
It was around 5,000 crores last quarter, so there's some reduction over there, right?
Yes.
And secondly, if I look at India operations, other expenses have gone up on a quarter-on-quarter basis as a percentage of sales. So any particular reason behind that?
So the other expenses have gone up because of the various factors, including the energy prices which has gone up, and also the higher utilization level across units. So that is the reason for increase in the other expenses.
And export side, you mentioned 484 crore revenue for the quarter. What is the number in the second quarter? Because if I look at the presentation, it says around 16% of India sales exports, and that number will come to around 400 crores. While you mentioned 484 crores, there's some disconnect in the presentation in this, or am I missing something over there?
So the total amount of exports in Q2 was about 500 crores, which is more or less the same. It's a kind of a flattish quarter as far as the exports are concerned.
But in the presentation, we mentioned 16% of India's sales as exports, and that number is only coming to 400 crores. So, where is the disconnect with this number and the PPT number?
No, that we will check, but 16% is on the basis of the second quarter sales, right? And
on the basis of?
No, see, he's saying that 16% is coming, if I have correctly understood. Second quarter number was 16%, right? Are you talking
both the quarters? In both the quarters in PPT, it says 16% of sales is exports.
Right. So the total amount of the sales has also gone up. The percentage for the exports will remain the same, because last quarter the total export was 514 crore to be specific, and this quarter the export was 484 crore. So based on the increased number, this is coming out to be the same.
Maybe I'll take it offline. There's some disconnect. Lastly, on the demand side, how do you see, especially in the truck segment, the replacement demand in this quarter? How is it going?
In the demand side, the overall tire industry looks good. We believe that the domestic automotive sector has a significant potential of growth, driven by aggressive stance, as I mentioned in my speech, by the government to improve on the infrastructure spend, higher fleet utilization and implementation of scrap policy. So there is a definitely rising in demand for even in the personal vehicle space, will be driving for higher disposable incomes of the middle class. Further, agriculture output will also foster well for the rural demand, and these tailwinds coupled with tapering inflation should also continue to boost the tire demand. So this is our commentary on the demand, and for the truck CV segment, I think with the freight movement and the core industry picking up, we see quite a good movement coming ahead.
Okay, thank you.
Just to clarify again that point of exports, if you are referring to the presentation, page number 16, I think the first portion, the pie is showing 16% revenue from exports for India operations, and the second one is on consolidated, which includes Tornel.
Yeah, but 16% is a what number? I mean, is it India standalone reported revenue?
I will try to understand what is your point, but we'll take it up separately.
Thank you. We'll take a next question from the line of Mitul Shah from Reliance Securities. Please go ahead.
Thank you for taking my question. Sir, I have a question on export side. Based on the export number given in the presentation, it seems that export from the Tornel declined sizably Q on Q. So can you give some detail here?
No, I'll request Bajuri to please take this.
That is mainly because December, there are Christmas holidays which start from something like 20th, 21st of December, and then the plant reopens only on the 4th and 5th of January. So it is only because of the lesser number of working days.
Can you say, sir, how much would be of total Tornel contribution is export roughly?
Out of, you mean the consolidated sales?
Tornel's export contribution in overall Tornel's financials.
It is about 40%, nearly 40% of the total exports of JK Tyre on a consolidated basis.
Mm-hmm. Okay, sir. Second thing on Mexico operations, if you can give more details, the way we explained about Cavendish, if you can highlight those details for Mexico also. In your outlook on the same.
Well, see, JK Tornel Mexico has achieved a turnover of 608 crores in Q3 of financial year 23, vis-a-vis 521 crores in Q3 of financial year 22, 17% growth on year-on-year basis. And EBITDA for the quarter stood at rupees 48 crores as against rupees 46 crores corresponding. And operating margin, it is about 8% in Q3 of financial year 23 as against 8.8% in Q3 of financial year 22. So this is the brief performance of JK Tornel Mexico for this quarter.
Yes, sir. Lastly, on Mexico side, how much would have been price hike during the quarter last 1 year, and anything we have done in Jan, Feb?
Well, last quarter has been a very, very nominal, maybe about 1.5 or 2% at the most, but more price increases were taken in Q1, Q2, and Q3. Actually, I am saying this because in Mexico, the calendar year is what we consider as the whole year, January to December 2022. Although for consolidation purpose, we are taking 1st April 22 to 31st March 23.
Anything, sir, in Jan, Feb?
I beg your pardon?
Any price hike in January, February?
No, that we will have to see, because at this point of time, there is a slight reduction in the raw material input prices, and therefore we are still watching the situation, how stable this decrease is going to continue to. And only then we'll take a view.
Okay, thank you, sir.
Thank you.
Thank you. Our next question is from the line of Tushar, an individual investor. Please go ahead.
Thank you for the opportunity, sir. My first question is on the fundraise side that you have announced of rupees 240 crore. My question is, when we have enough cash flow, like an average of rupees 150 crore per quarter, so what is the purpose of this fundraise?
I'll give this question to Sanjeev ji, please.
Thank you. So, well, this is for the purpose of funding our capex plan, which is undergoing, and also the future capex plans. So, the purpose is to fund and also for general corporate purpose and to strengthen the balance sheet of the company.
Okay. And my second question is, what will be the future volume growth expected for next 2-3 years?
Next 3 years.
I'll give this question to Anuj ji, please.
Yeah, so as we have been seeing that, after the recovery from the pandemic, we are seeing that this year we are seeing good growth, and we expect that the overall automotive industry in an upcycle. So this is expected to grow further. For the immediate next fiscal, which is FY24, we expect that, the overall automotive industry would grow at a high single digit, around 8 to 9%. And different segments would also be growing in that similar range. So once the automotive industry has this kind of a growth, the tire industry we have seen follows the similar trend, or actually has a slightly better growth than the overall automotive industry. So this is what we expect, and this upcycle will definitely last into FY25 as well.
Okay. Okay. Thank you so much, sir. And my last question is on the interest cost side. Why the interest cost went up in this quarter, and will it go up further, or you expect it to come down in the coming quarters?
Sanjeev ji?
Yes, sir. So, as you would be aware, there has been a significant increase in the interest rate scenario. And in fact, within India, if you see that there is an increase of almost about 2.25% by the Reserve Bank of India on repo rate. And similar and rather more aggressive increase we have seen in the case of the LIBOR and SOFR rate globally. So that is the reason, and the banks have actually transitioned the entire increase, but we have of course been able to negotiate to some extent with banks, and that is the reason why we have seen the increase in interest costs. And this has all happened in the last about 7-8 months. So that is why you are seeing an increase. Going forward, I think more or less we have already done with, and no further rate increase except 25 basis points may be expected, and therefore we will try to control this further, and no major hike is expected in any case.
Okay. Thank you so much, sir. That's all from my side.
Thank you. Our next question is from the line of Yash Agarwal from IIFL Securities. Please go ahead. Mr.
Hello.
Yash Agarwal, please go ahead.
Yes. So firstly, congratulations on a great set of numbers. I just had one question on the replacement segment. On an industry level, while the OEMs, the demand from the OEMs is pretty good, replacement is facing some kind of weakness. So what is the case in JK Tyre?
No, as you correctly said, the OEM is coming back very strongly. The replacement market is also coming back. They are because it is now the demand scenario is in a very strong footage, because the core sector industries has started moving and picking up. So has the movement. So the demand story is very clear. So this is going to be fueling the replacement market much better than before, and we are very optimistic that the replacement market will pick up.
Just to add, your question was that, OE demand seems to be higher than the replacement. Actually, OE, if you see, is bouncing back from a low base, whereas replacement demand had not dipped during the previous years. So it's actually on a good base. We are still seeing a good growth. But yeah, it doesn't match the OE because of it's a base effect basically.
Okay, thank you, sir. That's it from my side.
Thank you. Our next question is from the line of Raj from Navodaya Enterprises. Please go ahead.
Hello.
Yes.
Thank you for the opportunity, sir. My question is, what will be the effect of the duty hike on compounded rubber on the margin?
Well, the import duty increase has a marginal impact. This is regarding the custom duty on the compounded rubber. We will offset this through various extensive cost reduction measures. And further, our priority is to maximize domestic procurement. So we see this as very marginal impact.
Okay, sir. My second question is, what is the reason behind the sale and profit drop in Mexico's operation on quarter-on-quarter basis?
Yes, there is a slight drop, mainly because of the exports that has reduced in the month of December 22, and that has brought down the quarter exports to a lower level than what it was in October, December 21. But going forward, as I had also mentioned in my opening observations, that things are looking up, and you see, this is mainly, there's a reason for it, that the freight rates during this time, December 21 and October, December 21, and also earlier, July, September 21, they had shot through the roof. And suddenly now, in the last 6 months, that is H2 of 2022, financial year 23, these freight rates have come down drastically. So with the result that all the dealers there have been sitting on much higher cost inventory. And that is the reason that we have not been able to clock that kind of higher export sales, because obviously they are trying to clear those inventories which are at higher cost. But going forward, I think the situation will definitely equalize and be continuing to do better.
Okay, sir. So my last question is, as you said that your other expenditure is higher due to higher utilization. So my question is, will they be in 13 to 14% of sale or what in the future?
Will be, sorry, what is your question?
My question is, will they be in 13 to 14% of the sale or what?
So the other expenses are in the 13 to 14% range of the net sales. You are right. So this we are in the process of controlling, in fact, and let's say with the reduction in the energy prices going forward, probably there could be some reduction further going forward. So, but the overall percentage of other expenses will remain in the same range or maybe lower.
Thank you. That's all from my side, sir. Thank you.
Thank you. A reminder to our participants, if you wish to ask a question, you may enter star and 1. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Can you please share the Cavendish numbers for this and last quarter?
Your voice is not clear. Can you please your question?
The Cavendish revenue for this quarter and the Q2 as well, can you share, please?
Again,
In Q3 of this and corresponding.
So the Cavendish revenue for the quarter 3 FY23, 976 crores, and the corresponding quarter was 720 crores. So the growth of 36% over.
And what was the number in the second quarter?
Second quarter, 982 crores.
Okay. And what is the EBITDA number over there? EBITDA for the last quarter?
EBITDA for Cavendish quarter 3 was 9.7%.
9.7%.
Yeah.
Okay. So there is an improvement. And what was the number for the previous quarter, this second quarter?
Second
EBITDA number?
6.3%.
There is a good improvement over there in Cavendish.
Yeah, we had a good capacity utilization as well. A good improvement.
How much was the number in last quarter? What was the utilization level in the third quarter?
Kindly repeat your question.
What was the utilization level you said? Utilization level in Cavendish in the last quarter?
Utilization level for quarter 3 was 92 as compared to the previous quarter at 82.
82 was in third quarter last year.
Quarter 2 of current year. And quarter 3 of the previous, the corresponding quarter was 81. So it was hovering around 81, 82, but in quarter 3, we have taken it up to 92%.
As for numbers you shared, there is a drop in revenue in this quarter versus second quarter, 982 going to 976. So was the production higher than sales in this quarter?
So actually, the sales in quarter 2 was, so this is basically coming out of the product mix. We had sales of a different product mix in quarter 2. Quarter 3, we saw more of the 2-3-wheeler segment also picking up from Cavendish, which gives the volumes and capacity utilization, but maybe the top line is not that equivalent to the TBR.
Okay. So better mix was better in terms of higher 2-wheeler contribution. And also lastly on the capex part, how much capex we plan to do in this year next, and what is the capacity addition from that?
So as I mentioned, the total amount of capex which is under implementation as of now is on account of 2 projects. One is PCR, which is in JK Tyre for 530 crore, and the other one is in TBR for 236 crore in CIL, Cavendish Industries.
And what would be the capacity increase from these 2 capexes?
So about 16 to 17% PCR capacity and 10% approximately for TBR capacity.
10% only at Cavendish or overall?
Cavendish, for TBR capacity at Cavendish.
Okay, yeah, got it. Okay, thanks a lot. That's all from my side.
Thank you. Our next question is from the line of Ameen Pirani from JP Morgan. Please go ahead.
Yes. Hi. Thanks for the opportunity. My question was actually, with respect to the anti-dumping duty on Chinese truck carriers. As far as I understand, the duty was up for review because it expired in August or September of last year. So just wanted to get a sense that is there an update from the government regarding the status of the same, and on the ground does the anti-dumping duty continue to be operational? Hello?
There is an anti-dumping duty. Further to anti-dumping duty, there is already a protection in terms of the CVD duty, which is protecting the truck radial coming into India from China. And in terms of the anti-dumping duty, we are already taking this up and at an appropriate level.
Okay. Okay. But do we know if the anti-dumping duty continues to be operational while the government is, deliberating on the same, or has it been withdrawn for the time being?
For the time being, it is withdrawn.
For the time being, it has been withdrawn. Okay. So are we then seeing an influx of tires from China or an increase in competition from that side, or you're saying the CVD is still helpful enough?
No, right now the countervailing duty is helping, and we are not seeing any major influx coming into India from China.
Okay. Great. That's helpful, sir. Thank you.
Thank you. Any participant who wishes to ask a question may enter star and 1. Ladies and gentlemen, if you wish to ask a question, you may enter star and 1. As there are no further questions from the participants, I would now like to hand the floor back to the management of JK Tyre for closing comments. Over to you, sir.
Thank you very much for joining us on this call. And I would like to thank you all and hope we have been able to reply to your questions to your satisfaction.
Thank you very much, sir. Ladies and gentlemen, on behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.